Hello everyone. Welcome to Demand Supply Trading Practical session number 28 for the year 2025. Now, generally, I always tell in advance when these sessions are happening, but I'm not available on the weekend. So today I had no choice but to, start the session with a very, I'll say, small break between when I inform you people, because I just scheduled the session. There was no other option left for me. The only option was not to do a session on the weekend. So I thought it's better to do the session on a short notice versus skipping the session. So again, I apologize. I know the session has been scheduled on a short notice, but it's a very rare case scenario, and the only reason is because I didn't wanted to skip the session for this week. All right, so now before we get started, today is Friday, 18th of July 2025. Myself, Srijit Kakar, and also ensure that you people go through the disclosure, which talks about the representation, risk disclosure, risk involved in the market, and also about the copyrights. Now, we do have a channel on Telegram where we keep updating you with content related to demand supply trading methodology. So in case you've still not joined this channel, there are a few different ways you can join it. First and foremost, you can click on, you can scan the QR code which is on your screen. Next, once you go to our website, in fact, you will also be able to find the direct link in the description, right? That's the second way. Next, once you go to our website, which is srijitkakar.com, or you can use the short URL, which is sk.coach. So once you are on our website, you can just scroll down on any of the pages. Just give me a second. Let me quickly show you. Right, so once you're on our website, you can just scroll down on any of the pages to the footer section, and in the footer section you'll find this option which says join Telegram channel, and you have the join now button. Now you can click on this button and you can join the Telegram channel. So these are a few different ways how you can be part of this Telegram channel, and like I said, we keep updating you with content related to demand and supply, the schedule of these sessions, right? Stuff like that. All right, now today's session is practical application of demand supply methodology. So our demand supply course, which used to be a paid course, is now available as a 100% free course. Once you go through the course content, you basically learn the methodology theoretically, but unless and until we see some practical examples, at times we don't get a very good understanding of how to implement it. And that is what we do in these sessions. So every weekend, I do a practical session where we take some examples, and to those examples, we apply the complete methodology so that you people can understand how to plan trades very mechanically and very rule-based. Now, the best part about these sessions is that we are not analyzing something which has already happened, because like we always say, that's a piece of cake. Moves which have already happened, applying a number of indicators, applying a number of oscillators, it can be easily justified. But the real fun is when you have to do the analysis in advance. You need to identify areas from where you're expecting prices to turn, and that is what we call as the areas of demand and supply. So we are always doing our analysis in advance, and just because we do the analysis in advance does not mean that I share the analysis with you and then we forget about it. Whatever analysis I share with you, whenever those examples they get triggered in the future, we also review them. So that helps us see both the before as well as the after, and that helps build confidence in the methodology, which is definitely required before you start committing to that particular strategy, right? So I try my best to share examples every weekend so that you people can see the methodology work in action, and once you see it working in action, you start believing in the methodology, you start using that methodology. Now, there are some prerequisites, and completing these prerequisites will definitely make these sessions much more easier on you. What are these prerequisites? The very first one is the Trading Essentials course. Now, the reason it says optional is because someone who already has a very good trading background, if they wish to skip it, they can, though my recommendation would be, irrespective from what level you're coming from, whether you're starting as a fresher or whether you already have an experience of a number of years, you should still go through the Trading Essentials course. Now, how can you access the Trading Essentials course? Very simple. Once you're on our website, under services, you'll be able to find courses. Click on that and you can see the very first option is Trading Essentials. The course is available in English as well as in Hindi, so whatever language you're comfortable with, click on that button. You'll get immediate access to the course playlist, so it will be all the lessons lined up for you in a very systematic way. You have session 1, session 2, session 3, so go through all the lessons, and that basically covers your Trading Essentials course. Now, once you're done with your Trading Essentials course, the next prerequisite is the demand supply trading course. Again, how can you access it? Similarly, like we did for the Trading Essentials, you will go to services, you'll click on courses, and you can see the second one is demand supply trading course. Click on get started. This is also available in both languages, English as well as in Hindi. Plus, whatever practical sessions I do, we also keep recordings of them so that you can see a number of practical sessions. So how can you access the practical sessions? Just click here, and they are also available in both languages, English as well as in Hindi. So this is how your complete demand supply course is taken care of, from theory, which is the lessons, to the practical sessions, which we do every weekend. And yes, you can join these sessions live. You can also watch the recordings of the previous sessions as well. So those are the first two prerequisites. The next two is the rulebook and the flowchart. So during the live sessions, you will see that I use these two documents to plan trades very mechanically and rule based. So how can you access these documents? Again, under services, you have the option for downloads. And here you can see the very first one is your rulebook. The second one is the flowchart. So that's your rulebook. How to use this rulebook during the practical session, you'll be experiencing it, and that's your flowchart, which we will be using to understand what we need to do as a demand and supply trader step by step. Now, for today's session, we don't have any examples which are pending for review, because whatever got triggered in the past has already been reviewed. So we can straight away start with our analysis for today. Now, today's analysis will be a little different. Why it will be a little different? Because generally the way I scan my symbols, if you go through last n number of sessions, you will never see an example where the prices are making all-time highs, or maybe the prices are making all-time lows, because that's how I scan my symbols. I generally try to avoid symbols which are making all-time highs or all-time lows, because I know that if something is cheap, it's much more fruitful to buy versus something which is making all-time highs and it is still expensive, right? So that is why my scan is designed in a way so that it does not filter any symbols for me which is making all-time highs. But I got a request from one of the member, and he requested that I have gone through last X number of sessions. There hasn't been an example of a symbol making all-time highs, and you're doing the analysis on that. So if you can cover it during the session. So today we'll take that example, a symbol making all-time highs, because if a symbol is making all-time highs, we will be having demand areas, but we will not be having any supply areas. So how do I do my analysis? How do I do my curve analysis, right? So all those things, how do we manage it? Now, the fact is, the answer to all these things are already available in the rule book, but it's just that at times, unless and until we see some practical examples, we don't get a very good understanding of it. So that is the kind of example we'll be taking today, which I'll say, if you look at the last 1.5 years of recordings, there'll not be even a single session where we would have taken such an example. So let's look into an example of a symbol making all-time high. And if it is making all-time high, how do I do my analysis on it? All right, so before we get started, I would like to add that whenever it comes to trading, I always say that trading has to be a very mechanical and rule-based process. Now, why it should be mechanical and rule-based, I have explained this in a video. The title of that video is How to Start Trading. Link is in the description. If you have not yet watched that video, do ensure you watch it. Understand the process, follow that process. There is no bypassing it. So the sooner you start following the process, the sooner you will start becoming a rule-based trader versus an emotion-based trader. Very, very important process which everyone has to go through. But I know a lot of people, they don't do. I won't say a lot of people, I'll say probably 99% of the people, they don't go through that process, right? Because it definitely takes some time, and during that time we have to shift our focus from making money to gaining skills, which a lot of people don't want to put in that time and effort. Anyways, so again, whenever we start planning trade, the very first step is we need to define our trade purpose. Now, why do we need to define our trade purpose? In fact, the first thing is, what do we mean by trade purpose? Trade purpose basically implies the expected duration of the trade, which is from the time you enter the trade to the time you exit the trade. Now, when I'm talking about the exit can be the target, the exit can be break even, exit can be the trailing stop loss, exit can also be the stop loss, any kind of exit. So now the question is, why do we start with the trade purpose as our very first step? And the reason we are doing this is because when we do our analysis, the charts that we use, they are time-based charts, and we have a number of time frames available to us. So the very first challenge is that there are so many time frames available. So out of these a number of time frames, which time frame should I be using for my analysis? That's the very first challenge. And to overcome this challenge, we do not start by randomly selecting any time frame. We again go with a very logical approach. And that logical approach is that the longer I want to be in the trade, the bigger the time frame I should be using for my analysis. And similarly, the smaller I want the duration of the trade, the smaller the time frame I should be using for my analysis. So what I've done is I have divided these trades into 4 different purposes. We call them as the hourly income, daily income, weekly income, monthly income. Hourly income implies a trade where my expectation is that this trade can last for an hour or maybe few hours. Daily income, a trade which can last for a day or few days. Weekly income, a trade which can last for a week or few weeks, and monthly income, a trade which can last for a month or few months. Now, very important, by definition, I say daily income is a trade which can last for a day or few days. But when you're trading markets which are not 24-hour markets like our NSE market, which is not a 24 hours market. So I'm pretty sure all of you would have experienced whenever the market opens, some symbols they gap up, some symbols they gap down. Now, because of this gap up, gap down, what can happen is if you get a gap in your favor, you might get profit, which is bigger than what you were expecting on that trade. But if you get a gap against you, you can also lose more than what you were willing to lose on that trade. So we understand that whenever we hold a position overnight, by holding that position overnight, we are taking that added gap risk, which cannot be avoided, right? Because if it gaps up or gaps down the next day against us, we can definitely lose more than what we were willing to lose. So that is why my recommendation to all of you is that initially our hourlies and dailies should be done strictly as intraday trades. We don't want to keep them as overnight trades and take that unnecessary overnight gap risk. Now, when it comes to weeklies and monthlies, anyhow, we are not anticipating that we'll be getting the exit the same day, right? Here, our expectation is that these trades can definitely last for a few weeks or maybe even few months. So here, we have no choice. We'll have to keep these positions as overnight positions. But that does not mean that for weekly monthlies, we cannot have gap against us. It can still happen. But since we are leaning against some bigger time frames, the probability definitely reduces, right? So again, initially, our hourly dailies will be strictly intraday, weekly monthlies overnight. With time, with experience, once you start having your confidence, if you want to include daily incomes into overnight trades, that can definitely be done. So let's assume step 1, I opted, I want to plan monthly income trades. Now, as soon as I opted my purpose of trade, what is going to happen from the rule book, I'll get to know what time frames I should be using. So if I go to rule book, page number 28, we start with the topic, which is multiple time frame analysis. Because demand supply methodology is not based on single time frame. Demand supply methodology is based on multiple time frame analysis. So what are the multiple time frames we use? We use a minimum of 4 different time frames. We call them as the higher time frame HTF, intermediate time frame ITF, lower time frame LTF, and the refining time frame RTF. Higher time frame is used for demand supply curve analysis. Intermediate is used for trend analysis. Lower time frame is the time frame where we identify our areas of demand and supply for our entries and exits. And the refining time frame can be used for multiple purposes like fine-tuning the zone, different kind of entries like your type 2 type 3 entries, or in case we need to apply some additional rules, that is also where this time frame can help us. Next, what are the 4 different trade purposes? We have already talked about it. What is HIT, DIT, WIT, and MIT? So now the question comes that for every purpose of trade, what will be my 4 different time frames? And we get the answer from this table. Now minded, this table, which is on page number 31, is specifically for the NSE market because this market is only open for 6 hours and 15 minutes. If you're trading markets which are open for longer durations, like your commodities, forex, cryptos, or maybe some international markets, then you can look into the table, which is on page number 32. Now, since I opted, I want to plan monthly income trades. So from here, I got to know that as a monthly income trader, my time frames will be monthly, weekly, daily, 60. Monthly is the higher time frame used for curve analysis. Weekly is the intermediate used for trend analysis. Lower time frame is daily. That is where we get our SCTS from. SCTS stands for stop loss, entry, target, and size. And in case I need to use the refining time frame, then my refining time frame will be the 60 minutes chart, which can be used for multiple purposes like fine-tuning the zone, type 2 type 3 entries, or in case I need to apply some additional rules, that is also where this time frame can help me. So as soon as I'm done with my step number 1, I have the clarity to what time frames I'll be using, plus what is going to be the purpose of each and every time frame. So my challenge number 1 is taken care. Now the next challenge is, yes, I do know my time frames, but if I take example of NSE, on NSE we have over 2000 plus companies listed. So humanly not possible that every day I sit and analyze 2000 companies. So what we need to do now is we need to have a process in place which can help me get a smaller list out of a bigger list, because if I have a small list, I can do my analysis almost every other day. But if I have to go through 2000 companies every day, not an easy task. Now, how do we do this? For this, we use certain computer programs which are called as scanners or screeners. So if you'll do a Google search, you'll be able to find a number of free scanners, free screeners, which are either based on conventional technical analysis or fundamental analysis. But the challenge was that there was no scanner screener available based on demand supply trading methodology. So we also created 2 tools. One is called as the demand supply zone alerts, and the other one is called as the screener. So I've already activated the alerts as if now on my trading view, and The fact is, only, as of now, the Indian markets are closed, and specifically the NSE, but the cryptos, they work 24 hours, right? So I've set my alerts on cryptos. So in case if we get an alert during the session, I'll show you examples of how alerts they basically work, and I'll also show you example of screener, how screener works, because this is again a feedback I have been getting from you people, that if I can just briefly show during the session how they work, so it would be much more fruitful. But yes, we do have the walkthrough videos also available for them. So how can you watch the walkthrough videos? You can click on them and they will take you to the product page where the walkthrough videos are available. Otherwise, once you visit our website, you can go to services. Under services, you have trading view indicators, and here you can see you have your alerts and screener. You can click on subscribe. Once you reach the product page, on the right hand side, you will be able to find the walkthrough videos of these tools, which will better help you understand what these tools are. But let me just quickly show you how these work. Now, talking about the alerts, right? So what I've done is I have already set my alert for about 20 crypto symbols on the 5 minutes time frame. So what is going to happen, as soon as a zone forms in any of those symbols during this session, in case a zone forms, a quality zone will immediately get a notification. Once we get the notification, I'll show you. Could see this is how the alerts they work. But for screener, I can show you. So here you can see, because see, alerts, they update you for the zones which are getting formed during the live market, right? So during this live market, some zones have to form, only then I'll get the notification of those alerts. Unless and until those zones they form, I'll not be getting the notifications. In fact, what I could have done is I actually removed the alerts. I could have kept it here, because then we could have also seen the visual notifications, because they also give visual notifications. Probably the next time I'll do that. Now, as of now, you can see I also have the screener applied. So here you can see what I did was, in the screener, I provided a list of 15 symbols, and then I told the screener that out of these 15 symbols, find the symbols where my proximity to a demand zone or a supply zone is 2%. So can you see now, when I'm doing my analysis for identifying these symbols, I don't have to go through all the 15 symbols. It is telling me, okay, you need symbols where you're closer to demand or supply area. These are the only 2 symbols. So can you see, in just few seconds, I was able to skip 13 other symbols, and now I can only focus on these 2. So if I just open Axis Bank as an example, you will see that on Axis Bank, I will be closer to a demand area, and it says minus 1.67, which basically is telling me that from the current closing price, if we move around 1.67% down, so you can see this is my closing. If I move up around 1.67% down, okay, so why does it show me okay, 1.6? The reason could be because, you know, that on the daily time frame, you get the average of the last 30 minutes. So that could be the reason you have a small little variation, but you can see about 1.67%. if it moves down, we'll be hitting our demand area. Similarly, if I go to Bharti Airtel, here also you can see this telling me that from the current closing, if we move around 1.16% down, we will be entering into a demand area. And because I gave my option as 2%, you can see it is only identifying the symbols where we are within 2% to a demand zone or a supply zone. Now, we'll not be close to any of these supply areas. That is why it is not getting shortlisted for me. Now, if I just change it to weekly, just to see if anything else gets shortlisted. So on the weekly also, it's Axis Bank and Bharti Airtel. Oops, sorry, my bad. I don't have to change this. I have to change this. So if I go to weekly, can you see on the weekly, we are about 5.39% away from Axis Bank. Okay, but what is the settings I've given here? 2%. Okay, now I understand why it is showing this. So if I go to Axis Bank, Axis Bank, you will see on the weekly time frame, I will be closer to a supply zone because the zone is just formed. So that is the reason we have the zone, and it is shortlisting for us, right? And as of now, my zone identification setting is that based on the high and low. Can you see it is based on high low? So here you can see that the high or the low is within 2%, and that is where the zone was formed. If I change it to close, then I think Axis Bank will be removed from here. Can you see now Axis Bank is removed? So because I'm taking the proximity settings from the high and low. So you can see from the high and low, that is where the zone has formed. So it will definitely shortlist for me. So that is how it works. Can you see, just change the time frame. It tells you for that particular time frame. I'll get the results for the 4 hours time frame now. You can see this is where we are closer to demand, this is where we are closer to supply, and that is how quickly the screener works for you and shortlist symbols for you where they are matching with your criteria. All right, so that gives you the example of how the screener works. Now during the session, like I said, if you get any alerts, I'll also show you how the alerts also they work, because my alerts are already set. But for the alerts to throw results at us, a zone has to form during the live market, right? So as of now, if some zones will form, it will definitely give us the notification. If no zones are forming, we'll not be getting any notifications. So let's hope we get some notifications during the session. All right, so now you know that you have some tools which can help you shortlist symbols based on demand supply zones as well. But remember, irrespective what scanner or screener you're using, whatever results you get from these scanner screeners, you can never blindly buy them or sell them. The job of the scanner is not to tell you what you need to buy or sell. The job of the scanner is shortlisting such symbols where the probability is high that you might be able to find something which is in sync with your trade plan, right? So that is what it does. So let's assume whatever option you used, you got a list of some symbols, and the very first symbol was ABC. So what are you supposed to do now? On ABC, you need to go to the lower time frame. So now the question is, what is my lower time frame? We got the answer from our step number 1, that is a monthly income trade. My lower time frame is daily. So I'll go to the daily chart, and on the daily chart, I need to identify a zone, and by zone we mean any of these 4 structures. Now again, the good news for all of you is that our demand supply zone indicator, we do provide 7 days 100% free trial of it. So if you've still not taken a trial of our indicator, you can click on this, and once you're on the page, you'll be able to find the button which says 7 days free trial. Click on it, and it's a very short form. You just have to fill your full name, your email address, your TradingView username, and then you have to keep one thing in your mind, that is when you're providing your TradingView username, double check you're providing the correct TradingView username, because if you're provided incorrect, it will not get activated for you, it will get activated for someone else. So if you don't have a TradingView account, you can click here, you can create a free TradingView account, because all our tools, they work even on a free TradingView account. And then you can share your TradingView username here. In case you already have a TradingView account, you can click here, visit your profile, identify your TradingView username, provide here, choose how did you hear about us, click on I'm not a robot, and submit this form. And once you submit it, within 24 hours, the indicator will get activated for you, and then you can try it for free for 7 days. All right, so now that everyone has that opportunity, that at least for 7 days they can try the indicator 100% free. Whatever analysis we'll be doing using the indicator, so that you can see the power of the indicator, how quickly and how easily it helps us plan our trades. So yes, once you have identified the symbol, you need to go to the lower time frame. So let's assume that's the symbol which I got from the scanner, and you can see as soon as I applied the demand supply zone indicator, it is also identifying where are the demand areas for me. And since it is making all-time highs, I'll not be having any supplies, we'll only be having demand areas. So that's the very first demand zone, which is the rally-based rally. So let's mark this rally-based rally zone for us. So we have identified our zone, which is our step number 3, that we need to identify a zone. Next step is, once you have identified the zone, you cannot trade it blindly, you'll have to qualify it. And for qualification, it's a 2-step process. In step 1, we'll qualify it based on certain conditions, and in step 2, we'll qualify based on the booster scoring. So the very first thing we'll check is that the zone I have identified, can this be a case of level on top of level? Now, why do we start with level on top of level? Because if it proves to be a case of level on top of level, we might have to shift from the zone we have already identified to a different area. So that is why if some modifications needs to be done, we want to start with that modification before we proceed ahead, right? So how do we verify whether it is a case of level on top of level or not? It's a very simple concept. If you have an intermediate time frame zone, and the same intermediate time frame zone divides into multiple zones on the lower time frame. So again, when your intermediate time frame zone is dividing into multiple zones on the lower time frame, we call it as a case of level on top of level. So what we understand from here is that to be a case of level on top of level, my lower time frame zone has to be completely inside the intermediate. which means it has to be a coinciding level. So if we have a coinciding level, the possibility is that it might be a case of level on top of level, but if we don't have a coinciding level, it cannot be a case of level on top of level. So let's verify that the zone we have identified, does it coincide with an intermediate time frame zone? And the answer is no. You can see we do have an intermediate time frame zone, but that intermediate time frame zone is lower. So if I go back to the daily, you'll be able to see it now much more clearly. This is where I have my intermediate time frame zone. This is where I have my lower time frame zone. So my lower time frame zone is not coinciding. So again, we are starting with the very first one, right? So yes, so we don't have a coinciding level. So we can move ahead to the next condition. Is this zone because of a gap? The answer is no. Is it a structure of pivot or an authentic zone? Again, the answer is no. And is it a structure of unstable equilibrium? The answer is no. So the fact is, out of all these conditions, none of the conditions are applicable. And if none of the conditions are getting applied, the zone cannot be disqualified, right? If they are applicable, then there is a possibility, either qualified or disqualified. But if the conditions are not getting applied, by default, is the zone qualified for us? The answer is yes. So now that we know we have a qualified zone, we'll move on to the next step. And that next step is we have to understand its quality and the probability factor. So let's start applying the boosters to understand quality and probability. So starting with the very first one, which is freshness, the zone is definitely fresh, gets a score of 3. Talking about strength, we have an explosive move, gets a score of 2. Time at the zone, we only have 1 candle in the basing, which is again a score of 2. Reward to risk ratio, we are taking as an assumption for now. Now talking about the location, right? This is where the challenge is. Can you see if I go to the monthly time frame, I might be able to identify quite a few demand areas. In fact, you can see we don't even have any demand areas here. I think I'll have to change my settings, right? So this has to be 1M, sorry, 1M for higher time frame, intermediate is 1W, and my refining time frame is 60. Okay, and for this, I don't mind using tested zones because I'm planning trade on the MIT, so I don't need fresh areas. Perfect. So you can see we do have a demand area, but that's pretty far away. But yes, if I try to identify supply, we don't have supply. And in the past, we have taken many cases where we didn't have supply. So what we did was we took the most recent pivot high to draw the curve, but here we can't even do that because to take a pivot high, prices first they have to move down, right? Only then we know, okay, this is where we have our pivot high. Because if you think about it, what can happen on Monday, prices can keep continuing higher and higher and higher, and whatever we are considering as the pivot high as of today might not be the pivot high which is by Monday. So that is the reason we need a reaction to happen. Maybe at least if I'm on the monthly chart for a month, price has to go down before we'll be able to see a pivot high, right? Which we can't see as of now. So we can't even use a reference point. So what do we do in such a case, right? Where we don't have a pivot point, we don't have any supply. Now the very conservative approach is, because I can't do my curve analysis on this, let me skip this symbol and let me find another symbol where I can do my complete analysis. But yes, if I still want to do my analysis, then you will see that the rules are given in the rule book for all-time highs. And the rules are, okay, let's go back all the time. There it is. Can you see first rule is for a script which is making all-time highs, first and foremost, we do not plan a short trade unless and until we see a weekly supply zone. So the fact is here, I'm already planning a long trade, and even if I go to the weekly, you can see we don't have any weekly supply. So I know for sure that on such a symbol, I'm not allowed to plan a short trade. I will only be planning a long trade. We are already taking care of that. Next, if a symbol is making all-time highs, irrespective what the trend analysis might be showing us, we will always be considering it as an uptrend, right? Because it is a strong symbol. We have to give it that extra weightage of being a strong symbol, so that is why we'll always consider it as an uptrend. And because the script is making all-time highs and we can't draw our curve, what we need to do now is we need to consider all locations as equilibrium location, right? So these are the only two factors which will have to apply now. And can you see we are back to doing our analysis, which is very simplified now. And that analysis is, in fact, if I go to the weekly, you can see it is also telling us we are already in an uptrend, but even if this was showing us sideways or down, we would still consider it as an uptrend, right? That is what will follow as a rule for a symbol that is making all-time highs. So location is equilibrium, gets a score of 0. Because we'll be considering it as an uptrend, it will be a score of 0.5. Move from the zone, we need at least a 4:1 move, which I think we still don't have. You can see we only have about a 2:1 move, so this is going to be a score of 0. It is not a case of level on top of level. It is not even coinciding. And talking about trap, because it is making all-time highs. So if I go back, okay, so can you see we just got an alert? So now let me show you example of alert as well. So this is how alerts they work. Can you see as soon as you have a formation of a zone, we immediately got a notification, and that notification says on PENG USDT, right? On that we have a formation of a drop based rally structure. So let's go to this PENG USDT, and I need to go to not options, cryptos. Let me see. Did I give the spelling correct? PENGU USDT. And can you see if I go to the 5 minutes chart, can you see just now we have a formation of a zone, and as soon as a zone was formed, we immediately got the notification. You can see this just candle started about maybe a minute or two ago, and that is what alerts is all about. That as soon as you have formation of your demand area, supply areas, can you see you immediately get notified. Now just in case we get more notifications during the session, I'll also show you more examples. But now you understand what alerts are, that they notify you during the live market as and when the zones are getting formed. All right, so now coming back to our analysis, we were talking about traps. So like I was saying, if I go back, we don't have any price action, right? So if you don't have any price action, we can't see that support and resistance kind of structure we would like to see. So that is why we can't even check it as a trap. So if you look at the overall scoring, we have a score of 10 out of 10 for quality with the assumption of reward to risk ratio, and 0.5 for probability, which makes it as a type 2 or a type 3 trade. So now a symbol which was making all-time highs, we were able to do our analysis. We know this is a type 2 type 3 trade. Now another approach can be, I can say, okay, a symbol which is making all-time highs, I want to have more probability stacked in my favor. So because I could see the lower zone was also a coinciding zone, maybe even though I have a zone here, I don't want to use it. I just want to use this coinciding level, and then I start verifying it. So depending upon how conservative, how aggressive you are as a trader, you can definitely define your rules to make your trading conservative, to make your trading aggressive. But if you are going with the most recent zone, from the current market price, this is what we have. And is it qualified for us? The answer is yes, but only as a type 2 or a type 3 trade. So after applying the boosters, we got to know that this is going to be a type 2 type 3 trade. Now no matter how high the quality or the probability, we understand that any trade can be a stopped out trade. So we need to be ready for the worst case scenario, for which we'll do our proper position size calculation. Whenever the prices are back, we have to re-verify, because the markets are not static, markets are dynamic, conditions are changing almost every other second. So before we enter into a trade, we always have to re-verify, does it still qualify based on my trade plan? If the answer is yes, we place our order based on the entry type, in this case a type 2 or a type 3 trade. And once your order has been executed, the last step is your trade management, where step 1 is 1:1, we make it as a break-even trade, and after that, if we get the opportunity to trail onto it, we start using our trailing stop loss. So this is how we plan trades, very mechanically, very rule-based. And if these sessions are helping you plan better trades, take better trades, then do like the video. And if you're not subscribed to my channel, also subscribe to it so that you get notified whenever these sessions are happening. And yes, if you have any friends, family members, or if you're part of some trading group, like family members who are into trading, or you are on some trading group, then you can also share all these resources, which is my free course, my live sessions, recordings to the previous session, 7 days free access to the demand supply zone indicator. You can share those links with your friends, family members who are into trading or on that trading group, because I also understand, and I'm pretty sure all of you understand, that a lot of people are struggling with trading, so you never know, these resources might help them. Now at the end of the session, I take your questions, queries. So if you have any questions, queries, you can put it in the chat box. But before I do that, I would also add that I have also been getting this feedback that what if I don't want to ask my questions publicly, or what if I want to share my chart so that I can show you my analysis and you can review it. So for that, we do have an option now, which is called as one-to-one session. So once you click on one-to-one session, you can schedule a one-to-one session with me. There are two options available. One is a voice call, and the other one is your online meeting. So if you feel that on a voice call you can ask your questions, queries, and get done with it, you can go for a voice call. If you feel that you would like to share your analysis or you want to share your screen, then you can also go for an online meeting. So that option is definitely available now. All right, now coming back to, like I said, at the end of the session, we'll see if you have any questions, queries in the chat box. I'll answer them. So we don't have any questions, queries for today's session. One reason could be because not a lot of people were joining today, because this session was an unexpected session. Otherwise, I always tell in advance when the session is happening. But today I had no choice. So I had to, just randomly start the session, because otherwise I was not available on the weekends. So again, thank you everyone for joining in. Next, I'll be doing the Hindi session in just a few minutes. So thank you everyone for joining in. I'll see you now next weekend. Till then, it's safe. Enjoy your Friday evening. Take care. Bye-bye.